Hello everyone, Mr. Solution here. It's a pleasure to welcome you once again to today's episode, and we'll be looking at effective support and resistance trading secrets. Effective support and resistance secrets, okay? So we'll be looking at what support and resistance are, how they work, how you can effectively draw them for optimal performance in a trade. You can equally reach me in any of my social media channels. This is my WhatsApp contact. And then this is my Twitter handle. You can reach me in any of these platforms. All right, so let's proceed. The focus of study will be looking at how to draw support and resistance correctly. We look at how to trade off the support and resistance. And finally, we look at how to know when the support and resistance will hold. And I want you to understand that this video is courtesy of FTX Exchange. And if you're yet to sign up to the exchange, I would encourage you to kindly sign up. And as you're signing up, you could use my referral code, Mr. Solution. FTX is actually my favorite exchange for now because of the massive infrastructure and the massive things that are putting in place in the exchange, the speed of order execution and all the rest of other things they've introduced into the exchange. So I would encourage you that is watching this video to kindly sign up, and as you're signing up, you could use my referral code, that's Mr. Solution. Okay, so let's go ahead, and this is my referral link, all right? ftx.com, Mr. Solution, that's just my code. You could just go to the website as you're trying to log in. There'll be a provision for you. There's a provision for you to put your referral ID. That's Mr. Solution. That's my name. All right, so how do you draw support and resistance? How do you draw it? It's been a very big challenge on the part of traders how to effectively and efficiently draw this support and resistance. It has been a very difficult thing because one thing with this support and resistance is that if you don't draw them effectively, if you don't draw them efficiently, they are going to, it's going to affect your trade. It's going to affect your targets, all right? Some of the place you'll be looking at, okay, to take a trade. If you don't draw this support and resistance, it will impinge on your success. Okay, so first of all, we would want to describe what support and resistance is, or what they are rather. Okay, you can say that a support is an area or a zone where the price comes to rest before taking off. All right, so it doesn't really mean that each time the price comes to a support zone that it will go up. There is a probability, there is a high propensity that if the price eventually comes to that support zone, it could go down. Okay, so it's a two-way thing. Remember, in trading, we are dealing with probability. Okay, trading is more or less a case of probability. Okay, so we go with the one that has a higher probability than the other one. So when we talk about resistance, resistance is equally seen as a place where the price would have to get to before it either comes down or goes up. It's just like you're climbing a story building. Okay, you're climbing a 3-story building. You have to get to the first floor before you get to the second floor, then before you get to the third floor. Okay, so from the first floor to your second floor, that second floor could serve as your resistance. Okay, because you need to conquer that second floor before you can go to the third floor. And if eventually you couldn't proceed to the third floor and you start going down, that first floor has become your support. Okay, you're at the second floor. The one you are yet to get to is the resistance. The third floor you're yet to get to is the resistance, and then the third floor that you just passed is your support. Okay, so just get it. This is just the best way it can be described using the analogy of a 3-story building. You're climbing a 3-story building, you've passed the first floor, your intention is to get to the third floor. All right, you've passed the first floor, you're at the second floor. That first floor you've already passed is your support, and the third floor you're yet to get to is your resistance. Okay, so there is equally a chance that you might just get tired and say, okay, let's say you wanted to go and get something at the third floor, and then somebody calls you and tells you that that thing you wanted to get at the third floor is already downstairs. Okay, you could just start walking down. All right, that means there is no need for you to go up again, or maybe you don't have energy to climb again. Yeah, let's put it that way. You don't have the energy to go up again to climb that third floor. Maybe you've checked and it's too high for you, your energy can't carry you, so you decide to come down. That is just what we mean when we talk about support and resistance in trading. All right, so how do you draw this support and resistance? looking at this, you could see that this is somebody's support and resistance. You could see a whole lot of these things here. It's rubbish. It's wrong. Okay, because this thing doesn't tell you anything. It does. This leads to analysis paralysis. It doesn't tell you the particular direction that the trade is going. It doesn't tell you anything. It doesn't tell you this is the place you'll be looking at. So these kind of things people put up in their charts, and then at the end they say these things don't work or they are not doing it right. You're not doing it right because you're not doing it the correct way. Okay, so we'll be looking at the 3 strategic steps you have to take for you to draw an effective and a functional support and resistance. Okay, so we'll be looking at what these 3 steps are. Okay, and first of all, I said to draw an effective support and resistance, the first thing you have to do is to zoom out. Okay, you could zoom out either 8 to 10 times depending, and then the next step is to draw the most obvious levels, those levels that are very visible to you. You do not need to zoom your chart. You do not need to use a microscope for you to see those levels. So just draw them, and then finally adjust to get the most number of touches. Okay. Okay, so these are the 3 steps you need to take for you to draw an effective support and resistance zone. And remember, support and resistance are zones. They are not points. They are rather zones. Okay, so don't make the mistake of seeing support as a point. It is not a point, but rather it's a zone. So we are going to look at how to do this using some examples, and we'll head straight to our favorite exchange, which is the very exchange that is sponsoring this training, which is none other than ftx.com. So we'll go to FTX to look at how to draw support and resistance effectively. Right, so this is the FTX exchange, ftx.com is the exchange we're looking at. So let's first of all let's look at BTC. Let's analyze BTC. All right, let's draw the support and resistance of BTC USDT. Okay, so I'm going to search for it, and then BTC USDT here it is. All right, so I remember the 3 steps we measured out, the 3 steps we pointed out that you can use to draw your support and resistance. Let me change this into daily time frame, right? Because it's better that way. All right, so this is BTC USDT chart on FTX.com exchange. All right, so how do you draw this support and resistance? How do you draw? Remember, the first step is to zoom out. Okay, and that was just what I did. You zoom out. The essence of zooming out is for you to see the obvious levels. Okay, I said zoom out like 8 to 10 times, so count with me. 1, 2, 3, 4, 5, 6, 7, 8. All right, so this is quite clear. You could make it 10 as the case may be, but just make sure that what you're doing is very obvious to you. Okay, you're not blindly drawing the chart. Okay, so we start off, and what are the points that are very obvious to us? And I said draw the most obvious number of touches. Okay, so this is, let's bring out the icon for drawing support and resistance. Okay, we'll be using horizontal lines. So what are the most obvious levels we can see here? Okay, I think this is quite obvious to me. Just draw it here. Okay, the next one, which other one is obvious to us? This is obvious to me. Okay, and then another one, which other one is obvious to me? This point is actually obvious. And the next, which one is obvious again? Okay, this is quite obvious to me. It's quite clear to me. All right, and then finally, which other one? I could say that this area is quite obvious to me as well. Okay, this is quite obvious to me as well. Okay, so that is it. We've succeeded in drawing our support and resistance. Okay, taking into consideration the points that are quite obvious to us. All right, the points that are quite obvious to us. And please, there's something I want you to know. It is very, very pivotal. It's very, very expedient that you understand this. Whenever you're drawing your support and resistance, please pay strict attention to the recent price action. Okay, it is better for you to focus on what the market is doing now than what the market did previously. Okay, because the market is actually moving ahead. although we are trying to use previous action of the market to determine what the futuristic impact will be. All right. So even at that, you have to pay attention to what the market is currently doing. What do I mean by that? What I'm saying in essence is that if you're drawing your support and resistance, we should pay more attention to the current price action. All right. So what do I mean by, let me give us an example. We've actually drawn this support and resistance. The third step there is to what is to connect the most obvious touches. All right, so we're going to adjust it very well, so that what we did was kind of a rough sketch, so we are going to fine-tune it. So how do we start? By fine-tuning it. For instance, you can see this one here. Let me get this closer once more. Let me bring this closer. Okay. Oh, well, although that third step, you can actually skip it because everything is almost clear. All right, but for the purpose of this study, let's just go ahead to, okay, implement the three steps we marshaled at. All right, we're going to adjust it to fine tune this chart to suit what we are looking at. All right, remember, this is a daily time frame and not a 1 hour or a 30-minute time frame. All right, so, and as you know, in trading, the higher the time frame, the more the chart, the more trustworthy, unquote, the chart is, or even though you can never say for certainty that this is what is going to happen. But remember, in trading, we are doing a case of probabilities, but your profitability depends on the probability you pay more attention to, right? But we always tend to pay more attention to the probability that has a higher number, all right? The probability that gives us a higher chance. So we are trying to adjust this thing to suit the recent price action of the market, all right? So this, okay, this, and remember, like I said, support and resistance are zones, they are not points. Okay, don't just say, okay, that this is your support. You could say $10,040 is your support. It's not making sense. It's rather a zone but not a point. All right, so which other one are we going to adjust? There's really not much work to do here, as I said there. Okay, let's touch on this. So how many touches do we have? The most obvious touches. How many places did they touch? 1, 2, 3, 4, 5, 6, 7, 8. Even though, yeah, this, it was just there was a breakdown here before price picked up again. 7, 8, 9. Okay, we have 9 touches there. So this means that this 8, 7 is a very point to note, support note zone to note. All right, so let's also look at other one. That's is our support. Then currently our resistance, we have a resistance here. The resistance is at, okay, we have a very strong resistance here at $12,000. All right, because if you check very well, the price actually touched 12,000. Okay, the highest it went was $11,869, $12,104, I mean. Okay, so it actually touched $12,000 and then reversed. So that means 12,000 is a point of significance, is a resistance zone. Would have to note it as well. And remember, like I said, these are zones. Okay, you can't just say that 12,000 on its own is a resistance zone. It is a resistance point, so to say. So, and from here now, between 11,804 to $12,000, these are zones. It's a very strong resistance zone. Same thing is also applicable to our support. Remember, like I said, support and resistance are zone. Please, I'm emphasizing this thing for the purpose of clarity and for thorough understanding, so they don't join the bandwagon of traders or analysts who feel or think or say that resistance and support are points. They are not points, they are rather zones. All right, so if I was trading very well, I think I would, if I was trading, I think I would know where I would be channeling my focus. I would be paying more attention to. Right. For instance, this very zone is a very clear zone. Remember what happened there? This 12K, what happened? They touched it, and what happened there was a strong rejection. It rejected, it closed and lower than it opened. Hence, this bearish candle we saw here is a sort of a rejection. It was rejected, and then price came down again. Started from these very points, 11K, and then making a series of higher highs and all that. So that is how to draw your support and resistance. Let's also look at another one. Let's look at BNB USDT, how to draw your support and resistance. All right, okay, this is BNB BTC and we are still using daily time frame. All right, for a better understanding, let's just switch this to a lower time frame. It could be, let's use 1 hour, so that we have a broader view of what we're working with. All right, so okay, this is our BNB BTC. I want to get the recent price action. I want my chart to touch the recent price action. All right, so this is BNB BTC, and then draw our support and resistance. First step, okay, we've already adjusted. Sorry for that. That one skipped my mind. We've already adjusted 8 to 10 times for us to have a broader view of what we're working with. And then the second step is to draw the most obvious levels, the levels that are very obvious to you. This is obvious to me. This is obvious to me. Right, this is obvious to me as well. And then which other one? This is equally obvious to me. This is obvious to me. You can see how I'm doing this. I don't really need to start fine-tuning or adjust. I'm just putting all those ones that are very obvious to me. Then the third and final step is for what? Is for me to adjust, to fine-tune those levels so that they will fall in place, paying strict attention to the recent price action. All right, starting from this one, this could be nearly negligible, so to say. We could more or less neglect this, but for the purpose of clarity, we'll still pay attention to that. Okay, we see it touched here, touched here, 1, 2, 3. Okay, we have 3 touches here, and then this other one, remember this was once a resistance, then resistance became a support. You can see how the price actually flipped above it. What was once a resistance has become a support, as we have here. So I'm trying to fine-tune this one to make the most number of touches. All right, that's just what I'm trying to do, still paying attention to the recent price action. All right, so we can see a whole number of touches at this point. Here you can see what was once a resistance at this very point became a support because price actually flipped it. You can see when it got to this very place, it was rejected and price kept coming down. And then here it broke through the resistance, and then resistance flipped to a support, and then it went down and then blew up again. Okay, so this is obvious to me. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Okay, you can see we have 18 touches here, and I want you to know that the higher the number of touches, the more significant that area is. Please understand this. The more a price touches, or the more a support or resistance touches a particular point, the more significant that zone is, or a region is. All right, so please keep this at the back of your mind. All right, we'll look at other ones. This is the next one. We'll have to fine-tune it to make the most obvious number of touches. All right, this is quite okay, just a little adjustment. You can see the number of touches it's made. Okay, so this is how we do this. This is how we draw the support arrays, and looking at this as well, we can still adjust it. I just make a little adjustment here. All right, you can see what happened here. Right, initially a resistor, this resistance became a support, and what happened there, it got to this point, you couldn't break it and it went down. Okay, still tested this support zone again. What happened? It kept on going and tested it here, even though it didn't quite touch it. But remember, this is a zone. Okay, this very place equally encapsulates this resistance zone. This very point from here to there encapsulates the resistance zone. So this is still the area of resistance, which is quite significant. And what happened next, it equally broke it, and then price started going up, and then I've been making a series of creating a series of up and down movements. Okay, so it's been trending all this way. So this is just how to draw your support and resist. They can see how I did it, very clean, very neat. I do not need to stress myself. First of all, zoom your chart 8 to 10 times, draw the most obvious number of touches, and then finally take your time to fine tune it, paying attention to the recent price action. All right, so let's still proceed to our discussion. All right, in the next thing we'll be looking at is how you can use support and resistance to trade reversals. Okay, to know how if a price or if a price or if a coin will reverse at a given point using your knowledge of support and resistance. So how do you trade reversals using support and resistance? Actually, I've outlined two big steps that will help you to know that. One of the steps is that you should pay attention to power move into market structure. What do I mean by power move into market structure? Let's say we have a chart like this. All right, this is a chart. This is a chart. All right, this is a chart. And then power move into market structure. You want to pay attention to a price that moved in a heavy way. All right, so this is something like this. Okay, you can see that this is actually a power move into market structure. You can see that this is actually like three candles that made a tremendous move into area of into this resistance. This is a resistance zone. You can see how there was a power move into the market structure, okay, into the market structure. And then you focus on strong price rejection. What do I mean by strong price rejection? What I mean is that whenever you see this kind of power move into the market structure, just know that something is going to happen. But what the unexposed traders do is that whenever they see this kind of movement, whenever they see this kind of move, what many of them would be focusing on this very area. You know, this is an area of significance. Remember when I talked about the May formula, market structure, area of significance, and entry and exit and all that, okay, area of value. Okay, so what many traders will be doing is that they'll be focusing on this area of value. This is actually a resistance zone, so majority of them would want to long. So eventually they long, and then the market fails to, you know, break through, or maybe comes for a retest. What happened? The market will start going down. Okay, so what it means that whenever you see this kind of strong move, if it is this kind of big move into in the market structure, whenever you see this kind of move into the market structure, just know that something is going to happen. I wouldn't be in a haste to long. Okay, I would want to see what later happens at this area of value, at this support zone. And more often than not, I've discovered that whenever there is a big move, you know, whenever there is a big move which is formed with the aid of large candles, whenever you see large candles moving into an area of value in the market structure, there is usually a rejection. Okay, there is usually a rejection. So what I usually do is that whenever I see this kind of thing, I have to calm down and see how it plays out at this area of value. Okay, how the market structure reacts to this very area of value. Okay, so that's how it will. That's how the knowledge of support and resistance will help you to know how to trade, or how to anticipate rejection, okay, in the market structure. Whenever I see a big move into the market structure, it is usually followed by a strong price rejection. Okay, it's usually followed by a strong price rejection. That's what I noted there. Hey, I gave some tips. I said if you want to trade in this using this very factor now, pay attention to the size of the candles. Okay, the larger the candles, the higher the propensity of rejection, the higher the probability of that move getting rejected. So the larger the candles, the better for you. Okay, so that whenever you see this kind of large candle moving into market structure, is an indication that something is going to happen. All right, so I wouldn't be in a haste to jump into that trade. And then yeah, I said the longer the time away, the better. What I mean by this is that whenever let's say, okay, this is a chart, so to say, okay, and then you see that it has never tested this region, or so to say, okay, so what it means is that this region is an area of significance, because if you change your chart to a higher time frame, you will see that those traders that trade higher time frame, they'll be paying big attention to that very point that has never been touched before. Okay, when we talk about supply and demand and all that, they will always be paying particular attention to that very point that has not been touched before. Right, so that is why I said the longer the time away, the better, and then the larger the candles, the better. Let's go to a chart and then look at how this thing play out. I'm trying to Let me erase this so that it doesn't interrupt what the other things we'll be talking about. All right, so let's um, let's look at some given examples in our charts. All right, so all right, this is just the first example, the Binance coin we analyzed minutes ago. You can see here. Let me remove all this. Let me remove all this. Okay, let me remove all this so that you can understand what I'm talking about clearly. All right, you can see this. Okay, you can see here what happened. You can see this big move. Remember, I said the larger the candles, the more significant. You can see that. You can see how this candle moved heavily into this area. You can see where it touched. This is actually our support zone. You can see how it kissed it. It's like a kiss, so to say. And what happened next? Price started moving backwards. It started moving up again. Okay. So if I was trading this and I saw this, what is going to tell me is that there is going to be a rejection, which was what happened. You can see how the thing was rejected. Because why? Remember, I gave two conditions: the larger the candles and then the time frame. Okay, look at what happened here. It just touched it and all of a sudden what happened? The reverse, price started going up again. Okay, this is just an example of the very thing I talked about. You want to see a power move into the market structure, a power move into the area of value. What is our area of value here? This is our area of value is the support zone. This is our area of value. You want to see a power move. So whenever you notice this power move, anticipate a rejection. What happened? It was rejected. Although he tried testing it, but he couldn't get to that very point again. And then since then, price has been making a series of higher highs, so to say. It's been an uptrend. Let's look for another example as well to drive home this point. Okay, look at this one as well. This quite beautiful. Look at this. Okay, this was once the resistance. Okay, had already erased it, but let me emphasize it more. Let me emphasize it more here. All right, make it clear. Okay, you can see this. What happened here? You can see this power move into area of value. What happened next? There was a rejection. You see how it got rejected, and what happened next? Price has been going up and all that. Okay, so let's not just focus on BNB. Let's see if we can see that kind of information on other coins. Let's check BTC USDT to see if we can have an example of that. BTC USDT, right? Okay, BTC USDT, here we are. Cool. The same thing applied here. Look at it here. You see how it moved. You see that move and was rejected, and what happened next? Price has been, making a series of high. It's been going up and all that and all that. Okay, you can see been going up and all that. So that's just the point I was trying to make. You want to see a power move into the market structure. Okay, so that's that for that. Let's proceed. Okay, finally, we'll be looking at breakout as support and resistance. How do you know that there's going to be a breakout or a breakdown, right? Breakouts, price is going up, breakdown, price is coming down. How do you know that it's going to happen? Remember, this is just the opposite of what we just discussed initially, what we discussed in the first place when we said, if you want to know that there is going to be a rejection, you have to look at for two things. One, the power move into the market structure or the area of value, and then look at the candle, the size of the candle, just the exact opposite of that. So how do we know that a breakout is going to occur? Now, let's look at this. Look at these charts. Let's use a chart to talk about it using candles, of course. Okay, look at this candle. This is a chart, so to say. And now for us to know that a breakout is imminent, when you see this kind of formation, right? When you see this kind of formation, you can't really say it's a big move, or so to say. You see how the candle has been forming. Okay, so if you now if you can connect the chart, so to say, you see how this thing has been forming. It's making a series of higher highs. Okay, making a series of higher highs. So when you see this kind of chart forming, when you see this kind of chart formation in a coin, okay, it tells you that a breakout is imminent. Remember, it could be in the negative. Here we are having a series of higher highs and then higher lows favoring the uptrend. It could be lower highs and lower low favoring the downtrend. So I've marshaled out some points that will help you to know when a breakout is actually going to occur. All right, let me erase this. So what are these 3 points I've pointed out? Okay, point number one is that you want to see a higher low into resistance, the same thing I talked about. You want to see a higher formation of higher lows into resistance, and then you want to see lower highs into support, and finally you want to see a build up that is supported by what? Moving average. We're going to look at that in the chart. What do I mean? A higher lows into resistance. Remember, we have a chart like this. This is a chart. This is a chart. A higher low into resistance, higher low into resistance, okay? Higher low into resistance, you can see? Higher lows into resistance. So what this thing tells us is that at the point, buyers were willing to buy at this point. Again, they were willing to buy at this point. They were willing to buy here, to buy here, buy here. So generally, the price has been making an uptrend, okay? So if you connect the charts, you'll be seeing that this is actually an ascending triangle, okay? This is an ascending triangle favoring the bulls, favoring the uptrend. It doesn't really mean that price cannot break down. There is a probability, but remember that I said we are dealing with probabilities in this case. We are dealing with chances, but we want to favor the one that gives us a higher probability. We want to favor the one that gives us a higher chance, okay? So when you see this kind of chart formation, when you see a series of higher low, these are higher lows, these are lows, higher lows. They are higher lows because this one is bigger than this is bigger than the previous one, this is bigger than, so this is actually higher low, and then we have higher highs here, so favoring the bulls, like I said earlier. And secondly, look at lower highs into support. What do I mean by that? Lower highs into, we have another chart here, lower highs into support, okay? Lower highs into, we have something like this. Let's say we have something like this, okay? Okay, see, it has been lower highs, okay? High, lower high, low. You can see lower high. This is shorter than this. This is shorter than this. This is actually a lower high. So what it tells us is that a breakdown is imminent. That there is a chance, or there are chances that the price will break through this support and start going down. Remember here, the chances that it could break through the resistance and start going up. But here we are having the bias that you could break through the support and start going down. All right, so when you see this kind of thing, just know that a breakout is imminent. This is aside other indicators we talked about. Remember when we discussed Bollinger Bands and all that? Please, if you've not watched that video, I would encourage you to go down and click on it. We discussed Bollinger Bands at length and how it helps to when a breakout is imminent and when a breakdown is equally imminent. All right, so this is what knowledge of support and resistance helps us to know. Lower highs into support, this is a lower high into support, and then lower lows, so to say. So a breakdown is imminent. Price is likely to go down. Does it really mean that it can go up? Of course it can, but remember, this is a case of probability, but we want to switch bias to that one that gives us a higher chance, that gives us a higher probability. Okay, so here we have an ascending triangle, but this is actually a descending triangle. When you try to, don't mind me, this is actually a rough sketch, okay? This is really a rough sketch, so don't mind me. All right, so that is that for that. Then we look at how to notice a build up supported by moving average. What do I mean by that? Let's use charts, live charts to, okay, consider these 3 points. Firstly, I would want to erase this. Okay, so let's look at some charts. Right, this BTC USDT, let's see the things we just talked about some minutes ago. All right, you can see here that, remember I said the build up into resistance support. So look at what happened. You can see here that at this point we'll be having a series of what? We'll be having a series of higher highs. Let me try to see if I can draw the charts. Okay, let me use the trend line. Okay, you can see here we have a series of, the candle has been making a series of what, higher highs, so to say, making a series of higher highs. Okay, series of higher highs. Okay. Okay, you can see that even though at this point you can see this breakout. So when you see this kind of formation, it means that a breakout is imminent, and that was what happened. You can see that at this point the price actually broke out of this channel. It actually broke out of this channel. So what has you see what has been happening. Okay, so that's one example. Let's see if you can see the negative side to this. Let's see if you can see the negative side to this. Let me go to daily time frame to see if I can see something closer. It seems BTC has been making a series of high highs so far, so there is really nothing like that. Okay, you know, the third one I said, the move that is supported by MA, that's the moving average. All right, so this is actually a range. At this point, see that the price has been ranging. And how do I know that the price has been ranging? Let me just pull out my 20 moving average. This is my 20 moving average. Let me just slot it in. Okay, you can see that at this point, at this area, that the moving average has actually been support. The price has actually been supporting this moving average. It's been testing it, so to say, for some day. Remember, we are using, this is a daily time frame. We're using a daily chart to do this. So you can see that at this point it was supporting it. So what it means is that a breakout is imminent. And what happened next? You can see how there was a breakout here. But at this point, you see how the moving average was supporting, honoring this price. And this kept on testing it and testing, and not up to this very point it broke out. Okay, that's the point number 3. I wanted us to note is, let me see if we can, maybe let's check Ethereum for another example, so that this will enter you very well, you understand it properly. Ethereum, Ethereum. Okay, Ethereum USDT, Ethereum USDT. Okay, cool. Okay, still using that. Okay, same thing applied. So you can see that the price has actually been respecting the 20-day moving average. Okay, it's been respecting it, not quite so, not very cool, so to say. But if you check at this very point, see that the price has actually been ranging. It's been ranging. I'm trying to. Okay, you could use this parallel channel. Let me use this parallel channel to draw what I want to draw. Okay, this from here to here. Okay, then here to here. Okay, you can see at this point the price was actually ranging. It ranged at this very point up to this very point where it actually broke out. All right, so these 3 points will help you to know when a breakout is imminent. Okay, if you can't really get the chart, you could, and you see a range, you could just pull out 20 moving average or 50. All through my analysis, 20 or 50 have been serving me whenever it gets to this, either 20 or 50, they've all been serving, both of them have been serving me each time I get to this kind of thing, and I want to be sure if a breakout is imminent. I'll just pull either my 20 moving average or 50 moving average to test that range to know what is imminent. And you can see that so far the price actually respected it, telling us that a breakout is actually imminent. All right, so let's quickly summarize before we end the class. All right, so this is a quick recap. I said how to draw your support and resistance. First of all, you have to zoom out either 8 or 10 times, from 8 to 10 times as the case may be. And then the next thing is to draw the most obvious levels. And then finally, you have to adjust to get the most number of touches. Okay, so please note these 3 steps, very, very important. And then one of the things that support and resistance helps you to know is to know when there will be a reversal at support and resistance. And how do you know that? First of all, you have to check for a power move into the market structure. Okay, and then the larger the candles, the more significant, and then the longer the time away, the more significant, because higher time frame traders will be focusing on that very. If a price has ever tested a line or a chart or a point before or a zone before, higher time frame trader will always be focusing there. That's where that place will always be drawing their attention. And then finally, we looked at how um, to know that a breakout is imminent, either at a support or resistance, breakout at support and resistance, how to know if a breakout is going to occur at either a support or a resistance. Remember, my breakouts, I usually define my breakout as when there is uptrend move, and then my breakdown when the move is in the negative. Okay, so how do you do that? First of all, you have to check for a higher lows into resistance. A higher low into resistance means a breakout is imminent. Now, but when you see a lower high into support, means a breakdown is imminent. And finally, you have to look out for build up. Okay, build up, that's whenever the market is ranging. And then if you pull your moving average, either your 50 or your 20 moving average, and then it's discovered that the price has been respecting that point, just know that that breakout is definitely going to occur. So thank you so much for making our time to come to this. And please, I would encourage you, if you're yet to subscribe to my channel, do make sure you subscribe, and you're yet to register with FTX. That's my favorite exchange. As a matter of fact, this time I'll begin giving out free signals on any trade I'm carrying out using the FTS.com message. So please sign up, and remember to use my referral ID, Mr. Solution. It's actually two words but joined together. MRSOLUTION, Mr. Solution. And thank you so much. I will see you in the next video. Stay happy.